Yo guys, welcome back to another video here at TraderJourney on YouTube. Thanks very much for joining me on yet another video. I just wanted to talk you guys through a strategy which I have for the next 3 or 4 weeks of what my play will likely be for AMD. As you can see here guys, I'm done some charting, done some technical analysis, and this is what I'm expecting for a move for AMD. It's pretty clear from these graphs what we're expecting to happen. But it could go two ways, but I'll only be placing safe contract plays on this particular stock, and I'll be waiting for these setups to happen for me to enter the trade. And if the setup isn't there, then I won't be entering this trade, but it'll be interesting to see how this stock plays out over the next week, 2 weeks and 3 weeks. So this particular chart, I'm looking at the 1 hour chart for AMD on TradingView, and this is what I've looked at. So technically right now for me AMD is bullish, so I'm expecting this to go to newer highs, hopefully. Previous high of all-time high of 96.43. I'm expecting it to break that, and I'm hoping this technical analysis proves that. But as I said, it could go either way, so depending on what happens over the next week, I will then adjust my play for either way. So at the moment I'm still very bullish on the stock, and I'll be talking you guys through my technical analysis and hopefully proving what my expectations is for what this stock is looking to do over the next 2 to 3 weeks, or maybe even 4 weeks. So if anyone is looking to play this particular stock or this particular move, I would make sure that you have enough time on the contract to ensure that the play actually has time to do what you think it's going to do. And in this case, that obviously we're on a 1 hour chart, you would need at least 3 weeks, 3 weeks on the contract to have that time value to make sure the stock moves in the direction you expect it to. Looking in the past moves of AMD, if you'd entered a trade on the 1st of December, generally, you do need at least 3 weeks to be safe to ensure that the stock moves in the direction, especially if you're looking to swing like I am on this occasion. So just talking through my technical analysis, so you can see I've sort of faded out here some supply and demand zones, some demand zones which we've previously seen here in green from the range of 92.63 to around 92.18. That was a previous demand zone which was then invalidated as AMD broke through that demand zone, that support zone, and that then turned into a supply zone. So right now on the chart you will see that range for me as being a supply zone. But what I'm expecting and what I'm hoping to see happen now is, as AMD went further down and reached the next level of demand zone support, we saw the price just break out with a huge green candle, which is obviously shows the bullish sentiment for this stock. And what we can see happening here is, if you guys are familiar with your patterns, I will make a new video on trading patterns, but this is clearly a bull flag going on here, so which is why I am still bullish on the stock. This is a particular pattern which is easily seen, and you can see it's been trading within this range here for some time over the past 2-3 days. So for me, I'm expecting a breakout of this range. Let me see if I can just color that in separately for you guys so you can see that. So right here, this is in fact a trading range. This right here is a trading range. So for me, as you guys have probably known from my previous videos, I only trade high probability trades, and I don't tend to trade things where you're just sort of guessing and hoping that the stock is going to move somewhere. I only trade high probability movements and stock movements. So on this analysis here, I'm technically proving here that there is a range where AMD likes to move and move frequently. So this range here, which I've illustrated on this chart, is this range between 94.24 and 92.66. So a nice easy $1-2 move there, and it's easy to profit off of these moves. What you can use is, in this instance, is the historical price movements between that range have been highly volatile and move between the range very quickly. So that's a good thing, and that's something you want to look out for, especially when trading supply and demand zones. So when you sort of chart these graphs with your supply and demand zones, you can also work out what the risk to reward ratio is, but I'll try and make that in a separate video. So it helps you assess and analyze how profitable the trade is likely to be. But as you can see, I mean, it's a huge range. So as you can see from historical movements between the range, when prices hit it, and we obviously saw on the last 3 occasions, as soon as prices hit this area of demand, which is now currently a supply zone, which I'll get into what I'm expecting to happen, but in the previous 3 occasions where we've seen this level of demand, the prices broke from demand and got to the next level of resistance, which is hence why I have this particular trading range and profit target. So 3 occasions, on the 2nd of December, on the 4th of December, and on the 8th of December. So as soon as it's broken out of that range, what have you seen happen? You have seen some pullback, but if you ensure that your stop loss is set correctly, you will make sure you stay onto the play and wait till it hits the next profit target. So a really interesting way of analyzing this stock, and I mean, AMD is probably one of my favorite stocks to trade, and having traded it, you kind of understand how the stock tends to move. And with this bull flag set up right here, I would expect AMD to break through this bull flag. So it break through 92.17, rehold this position of this supply zone, and if it doesn't break through the supply zone and breaks down, then I still won't play it short, because of the fact that there is a high chance of it ranging between this area. So that's probably a key area for you to also spot, is that if the price is entering an area where it typically tries to range and not make a correct direction into where the stock wants to move, you want to avoid those areas. So this particular area here between 92.16 and all the way down to 90, let's call it 90.21 or 90.20, you can see there's a huge range here, and it's just too much chop, and you don't want to be trading when a stock is in an area where it generally tends to just move between those price ranges without a clear direction of the stock. But from my recent analysis here, it's clear to see that this area with this black box it's a clear area of direction. So if we break out of this supply zone, this previous supply zone, and then create a demand zone here, I will be entering this trade above 92.63. So as soon as it hits 92.63 and holds above that level, I will play long to the first initial profit target of 94.24. I would likely go in with 4 contracts, roughly 3 weeks out, just to ensure the play makes the move. And like I said, if it hits this level of supply and rejects at the level of supply, then I just won't play the trade. I will wait till it retests and reholds this previous level of demand which we saw, and then I will wait for it to break 92.63, enter the trade, and with the hopes of it hitting the profit target there of 94.24. However, that's not to mention for any beginner trader. If you don't need to wait till it hits the 94.24, if you hit your profit target, percentage target, you can take your profits and nothing should stop you from doing that. One thing I'd like to also mention is that all-time highs for AMD was the 96.39 area, 96.42 area. What I would also say to that is, if AMD does hit this profit target and I'm 4 contracts deep, I will wait for it to then continue past that and potentially retest all-time highs. And it is very bullish right now for me, AMD, and as you can see, the EMAs are about to cross, which is again very bullish. So we do hopefully expect that this AMD price level to break through supply and then potentially aim to new highs. But like I said, I will not be entering the trade until it breaks through that level of supply zone to then recreate the level of demand which we previously saw prior to December 9th. So it's all about analyzing these zones and ensuring you are making you're getting the most possible reward for the least amount of risk. So I'm very conservative as a trader, and I just want to make sure that I'm getting consistent income through consistent and high probability trades. One thing to also mention, which I haven't actually charted on the graph, is that there is a good area of movement between, I'll just copy this rectangle, paste it in here. There is a nice level of movement in this zone as well. So this is a clear level here as well. Like as we broke down, where did it retest? It broke into level of demand. When it broke out of demand, where did it go? It went back up. So this is a clear movement area. This is a clear gap which we could use to exploit as well. But granted, it isn't actually as big a price move. You're moving from 90.22. It's still $1.05, which is still profit, and it's a high probability trade. So it's good to chart these on the graph, and it just puts into perspective what you should trade and how you should trade and what your expectations are. If none of those zones hit and it continues to range between this area, then you just simply don't play the trade. You only wait for that setup to happen when everything matches up, your volume, your price level, and all your indicators are flagging, which is part of my entire strategy to ensure that the trade is high probability. Then I will simply pull the trigger and enter the trade, and you don't look back until it hits your stop loss, and you would set that anyway. So if, for instance, in this trade, I might go over this actually very briefly, but if, for instance, on this trade you entered when you on a conservative approach on 92.65, if you entered there and the price came up and then it came down, my stop loss would be 92.15. The simple reason for that is that, look, this is a high level of demand. If it comes up and it comes down, chances are the demand will keep pushing it up. So unless it breaks below 92.15, then I will continue to stay in the trade, and it's a low level of risk. Your potential loss between 92.65 to 92.17, your 50 cents move, you're not risking a whole lot of money on your contract. So it's worth the risk to enter this trade to then get a potential $2 move. It's high probability, and then potentially if it hits the profit target 1, then you can taper off some contracts, sell a couple of contracts, and see if you can ride out the other 2 contracts, and see if it breaks all-time highs. Then you just let that contract simply run, and who knows what the potential profit target would be. But until you're happy and satisfied with those profits, you can take those off the table. But that is my sort of strategy and what I'm expecting AMD to do right now. It's very bullish, as I said, and I hope it stays that way, but there's no news that can affect the price as of now. And one thing, and the only thing that could potentially cause a change in the movement of the direction of the stock, is a huge catalyst such as news comes out, but that is unlikely for a stock like AMD, as it's a fairly stable stock, and it tends to move in the direction of your technical analysis. So as you can see, we're at all-time highs. We just fell below all-time highs, so I'm expecting that this level of support demand zone here, that is very bullish. And as you can see from previous, I can actually stretch this level of demand out to here, because as you can see, look at the huge green candles, and as we've just seen as well, and then as it's broken the next wave, you can see a huge green candle as well. So the reason why I say take it 2-3 weeks out of expiration is because look at what happened the first time it tried to break. There was a lot of chop there. But if you had set your stop loss correctly, which is what I'm saying, you would have rode this out and waited for the next push, and that's potentially what might happen here as well. It may break through this level of supply and then come back down. So it's good to have some time on the contract to let the play happen and give it some time for the play to work itself out. So I keep mentioning that on my previous videos, but I hope that's clear for all of you guys. I hope you enjoyed this video. It is a particular strategy that I work on, and it's been fairly successful for the whole of 2020 and hopefully for the future years to come. But if anyone's got any comments or questions, leave it in the comment section below, or hit me up on my Instagram, which I'll leave in the description box below. I will be offering a community Discord chat very soon, but I'll be announcing that on my website and across the social media, including YouTube and Instagram. So that's all I wanted to cover today. I hope you enjoyed it, and I will catch you all on the next video. Take care. Goodbye.